Tampa's housing market has a 70% chance of further decline. That's not just a number. It's a reality hitting homeowners hard. As of October 2025, home values have already dropped 5.6% compared to last year. For families counting on their homes as investments, that's 5.6% of their future slipping away. And with experts warning the worst may not be over, the stress is mounting. What does this mean for those already struggling to keep up? The answer isn't pretty. The Tampa housing market was riding high, with prices climbing like they'd never stop. Buyers were scrambling, bidding wars were the norm, and it felt like anyone with a for sale sign could name their price. Then, almost overnight, the tide turned. The Zillow Home Value Index, that trusty barometer of the market, started slipping. First, it was just a little dip, nothing to panic over. But then it kept going, month after month, until the numbers didn't lie anymore. By the time the dust settled, values had dropped 5.6%. That might not sound like much, but in a market where every decimal point mattered, it was a gut punch. Sellers who'd been sitting pretty suddenly found themselves staring at offers that didn't quite add up. The frenzy was over, and the reality of a cooling market set in. What had been a seller's paradise was now a waiting game, with everyone wondering just how far things would fall. The housing market's been feeling a bit under the weather lately, and the numbers are starting to tell the story. Over the past year, the median sales price has slipped by 0.9%. Not a huge drop, but enough to raise a few eyebrows. And just when you thought things might steady out, we've seen another little dip, this time 0.3% in the most recent data. It's like watching a slow leak in a tire. Nothing dramatic, but you can't ignore it. These small declines add up, painting a picture of a market that's losing a bit of its steam. It's not a free fall, but it's definitely a trend worth keeping an eye on. The latest S&P CoreLogic Case-Shiller Index report is in, and it's showing a 1.5% year-over-year decline for Tampa. Now, this isn't just any report. It's one of the most trusted measures of home prices across the country. The index tracks changes in the value of residential real estate, and when it speaks, the market listens. So, a drop like this? It's worth paying attention to. Tampa's been a hot market for a while, but even the strongest trends can shift, and this data gives us a clear snapshot of where things stand right now. If you're watching the housing scene, this is the kind of insight you can rely on. Tampa's housing market has been one of the hottest in the country for a while now, but lately, it's been cooling off, and fast. Just look at Zillow's latest rankings, where Tampa dropped a whopping 19 places, falling from 10th to 29th in the National Market Heat Index. That's a big shift, and it tells us a lot about where things are headed. So what's behind this drop? Well,
I thought it would be a good time.
For starters, mortgage rates have been climbing, making it tougher for buyers to jump into the market. Higher rates mean higher monthly payments, and that's enough to make some folks pump the brakes. On top of that, home prices in Tampa had been rising so fast that affordability became a real issue. When prices outpace what people can actually pay, demand starts to soften. And let's not forget inventory.
Economic uncertainty reigns
more homes
supreme,
are hitting
and
the
that's
market
fueled a
now,
rush
giving
to buy
buyers
gold.
more
The
options
price
and
of
less
the precious
urgency
metal
to make
top
quick, competitive offers. That's a big change from the frenzy we saw over the past couple of years, where bidding wars were the norm. All of this adds up to a market that's finally catching its breath. Tampa's still a great place to live, but the days of skyrocketing prices and instant sales might be behind us, for now, at least. It's a sign that things are balancing out, which isn't necessarily bad news. It just means the market's settling into a more sustainable pace. Right now, if you're looking to buy a home in Hillsborough or Pinellas counties, you've got options. Lots of them. In Hillsborough County alone, there are over 3,500 homes sitting on the market. That's right, 3,500. And it's not much better in Pinellas County, where nearly 2,800 homes are up for sale. To put that into perspective, that's more than 6,300 homes combined, just waiting for buyers. And with numbers like that, it's clear we're dealing with an oversupply. Sellers are finding themselves in a tough spot, competing for attention in a market that's flooded with choices. So if you're in the market for a new place, now might just be the time to make your move. Because with this many homes available, you've got the upper hand. You won't believe what developers are doing to get people in the door these days. We're talking $50,000 off the asking price. Just like that. And that's not all. Some are throwing in free rent for months, covering closing costs, even tossing in fancy upgrades like high-end appliances or smart home tech. It's like they're practically begging folks to sign on the dotted line. But here's the thing. If the market was hot, would they really need to do all this? Probably not. It's a clear sign they're sweating, trying anything to move these units before things get worse. And who knows? If you play your cards right, you might just walk away with a steal. But don't forget, there's always a reason why they're so desperate to make a deal. You know, the market's been rough lately, and a lot of investors are feeling the pinch. Some folks who bought properties just a few years ago are now selling them at 20% below what they paid. That's not just a dip, it's a serious hit to their wallets. Imagine putting down hundreds of thousands, thinking you're making a smart move, only to watch the value drop like a stone. It's a stark reminder that real estate isn't always the safe bet people think it is. The thing is, when prices fall this hard, it's not just about losing money on paper. It's about the stress, the sleepless nights, and the tough decisions. Do you hold on and hope things turn around? Or do you cut your losses and walk away? Either way, it's a gamble. And right now, a lot of folks are learning the hard way that even the so-called sure things can go sideways. It's a wake-up call for anyone thinking about jumping into the market without doing their homework. Because when the tide turns, it can sweep you under fast. You know, living in Tampa comes with a lot of perks. Great weather, beautiful beaches, and a vibrant community. But there's one thing that's been hitting homeowners hard. The sky-high insurance costs. We're talking about rates that are 3 times the national average. That's right, 3 times. So why is it so expensive? Well, Tampa's right in the crosshairs of Mother Nature. Hurricanes, tropical storms, and even just the everyday threat of flooding make insurers nervous. When the risk is high, the premiums go up. And it's not just the big storms. Even smaller weather events can cause serious damage, leading to more claims and higher costs for everyone. For a lot of families, this means shelling out thousands more every year just to keep their homes protected. And when you're already dealing with rising property taxes and everyday expenses, that extra financial burden can really add up. It's not just about paying more. It's about the stress of knowing that one bad storm could leave you in a tough spot, even with insurance. So while Tampa might be paradise, the cost of protecting your slice of it is anything but cheap. And for many homeowners, that's a reality they have to face every time they write that insurance check. Back in 2020, mortgage rates were sitting pretty below 3%. It was like a golden ticket for homebuyers.
We have 30-year bonds
money,
up for auction. That was a little less fun. Rick Santelli is tracking the action, and Rick, it was a little soggy.
But then, things started to shift. Slowly at first, then all at once. Those rates began to climb. By 2022, they'd shot up past 5%, and folks who'd been sitting on the sidelines suddenly found themselves scrambling. Then came 2023, and rates didn't just climb, they leaped. 6% became the new normal, and before anyone could catch their breath, 7% was staring them in the face. That's more than double what it had been just a few years earlier. For someone with a $300,000 mortgage, the difference was staggering. At 3%, the monthly payment was manageable, maybe around $1,200. But at 7%, that same loan ballooned to nearly $2,000 a month. Suddenly, budgets were stretched thin, and the dream of homeownership started to feel like a distant memory for a lot of people. Families who'd been planning to upgrade found themselves stuck. First-time buyers were priced out, and even those who'd locked in low rates earlier were feeling the pinch as everything else got more expensive. It wasn't just about the numbers on paper. It was about the real, everyday strain of making ends meet when the cost of borrowing had skyrocketed. The housing market tightened, and for many, the American dream got a little harder to hold on to. So, you're sitting across from your financial advisor, and she leans in with that look, the one that says, "Okay, let's get real." She starts by saying, "The market's been a roller coaster lately, and I know that's got you feeling a little uneasy. But here's the thing. We've got options." She pulls up your portfolio on her screen and walks you through it. First, we're going to take a hard look at your asset allocation. Right now, you're a little heavy on stocks, and with the volatility we're seeing, that might not be the best play for your goals. Let's shift some of that into bonds or even some short-term treasuries to give you a little more stability. Then she gets into the specifics. I'm also seeing a few underperforming sectors in your mix. We can trim those back and reinvest in areas that are showing resilience. Maybe some healthcare or utilities, stuff that tends to hold up when the market gets shaky. She pauses, making sure you're following. And let's not forget about diversification. If you've got too much tied up in one industry or even one company, now's the time to spread that risk around a bit. She wraps it up with a plan. Here's what I'll do. I'll run some updated projections based on these adjustments and send them over by the end of the week. That way, you can see how this new strategy plays out over the next 5-10 years. And if you're comfortable with it, we'll make the moves. Sound good? You nod, feeling a little lighter already. It's not about panic. It's about adjusting the sails when the wind changes.